Ladies and gentlemen, good day and welcome to Q4 and FY2024 earnings conference call of Lincoln Pharmaceuticals Ltd. As a reminder, all participant lines will be in the listen-only mode, and you'll be able to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Ms. Trusha Shah, Company Secretary and Compliance Officer, Lincoln Pharmaceuticals Ltd. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone. I, on behalf of Lincoln Pharmaceuticals Ltd, once again welcome you all the fourth quarter and financial year 24 ended March 2024 earnings call of Lincoln Pharmaceuticals Ltd. On this call, from the management, we have Mr. Munjal Patel, Whole-Time Director, along with Mr. Darshit Shah, Chief Financial Officer, and myself, Trusha Shah, Company Secretary and Compliance Officer, and our Investor Relations team. Before we begin the earnings call, I would like to mention that some of the statements made during today's call might be forward-looking in nature. The statements are based on current expectations, forecasts, and assumptions that are subject to risk and uncertainties. I will now hand over the call to Mr. Munjal Patel for his opening remarks. We will then open the forum for question and answer session. Over to you, sir.
Hello, everyone. My name is Munjal Patel. I am a whole-time director in the company. I take care of the finance as well as export business in the company and the factory also. So, just to give you a brief of our company started in the year 1979, and gradually we were on the marketing model only at that point of time. In the year 83-84, we established our first facility in Naroda. Gradually, we expanded in the state of Gujarat in various areas through the promotion model. Then we moved to the export business in the year 91-92 from the African region. And in the year 93-94, we established our first injectable plant. And our Naroda facility was still up and running then. In the year 95, we planned to make the company listed. We got it listed and used those against our new facility at that point of time for the tableting block. And we established the new tableting block in 1995 and foreclosed the Naroda plant, which was a bit older and newer technology was there in the Khatraj site. After this, during the due course of time, every couple of years or every 4-5 years, we have keep on upgrading our documents, our products, our licenses, even the machinery, different avenues which were guided by the WHO to have the CGMP practice, which is called the current good manufacturing practice in our terms, in the pharma term. So we were following, and we have followed till then, and till now we are doing that. Lately, looking to the last 6-7 years, we have entered various markets, potential markets, which weren't explored before, which in which we have even entered and approved by the EU. Now we have already started exporting the products to Canada, as well as now we are in plan with Australia also, according to the guideline of TGA, since we have the TGA and the EU certificate from Germany. So we can do that now. And we are looking to invest more into the newer molecules and market the product ourselves into various regions in India, as well as in the exporting markets. We are totally present into 60 countries as of now. In the domestic presence also, we are present in more than 13 to 15 states. And we have a team of around 600 people domestically, and in the export we have a team of around more than 30 people who are based into various countries and have their own marketing team. Also with that, in our factory, we are employing as of now more than 1,400 people with the contractual manufacturers. So as a group of the Lincoln, which we look at, we are employing more than 2,300 people. With that, we have also, during the due course of time, we have established ourselves towards the green energy projects. Firstly, we were invested in the windmills. And this current year, we invested into the solar plant. We have put up a 4 megawatt plant, and also the rooftop solars are already present at the factory. With this, it gives us an opportunity to become energy zero in terms of energy. We won't be paying to the electric board anymore. During this all period, we have made the company debt-free in terms of loans or any bank-related activities. So the company is working as a debt-free company since last 4-5 years, and whatever new projects we have done, which accumulates to last 3 years, if we see, we have almost invested more than 100 crore into various activities of capex, is done by internal approvals only, and we have a mindset of still doing that. And if opportunity comes, we would be taking a call if needed to get loan, but first priority is through internal approval. We would like to establish our future expansion plans also. Now, if needed, we can go with the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. An operator will take your name and announce it in the question queue. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Yogansh from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible?
I think so. The voice is a bit louder. So I think.
Is it better now, sir?
Yeah.
Yeah. So thank you for the opportunity. And first of all, this is a very good initiative of hosting a con call. And I hope the company continues this in future. So, sir, quickly coming to my questions, if you could broadly help us understand for our domestic and export business, how much of it is in our own branded business and how much is through distribution to various countries?
Okay. Looking to that for the domestic market, whatever we are doing is 100% promotion, and it is on the base of Lincoln only. And we only are promoting Lincoln products in the domestic market. And for the domestic market, there are 100% is promoted through the teams which are present in the various states through the organized structure. Even from ZSM to the MR, we visit to the doctor, and then the prescriptions are generated, and then only our products are being sold. So that is one question for the domestic market. For the export market, what we have done is we are into B2B business. Mostly we were till the year, considering till 2021, we were into mostly B2B business, wherein we had country managers. But those country managers were based and they were promoting the product, but not through an organized structure. So from 2021, we have started taking up that project and marketing the products in all these regions wherever we are present. So now we have around 30-35 people roughly on ground in various countries wherein we are promoting the product. Secondly, on your question, we have product registrations of more than 1,500 products plus by now in various countries, which includes Africa, Latin America, Southeast Asia, and also the part of a bit of GCC. Now looking to that market, it all belongs to Lincoln, those products. Yes, we have few products which we do on contract manufacturing basis also, but it's vice versa that they market our product also and we help them manufacturing their product also. So it's a kind of a business wherein we can utilize their niche also and they can utilize our niche also. So that's what is the plan and that's what we are doing as of now.
Got it. So, sir, I mean, export broadly still this after the 2021 change, majority business would still be in other people's brand, but going forward we would try to bring it up to more into the brand of Lincoln Pharma, right?
No. You're still getting me wrong. Whatever the business we are doing as of now, before 21 also, was into Lincoln brands only because we own the registration.
Okay.
We pay the retention fees, we pay the registration fees, we pay the documentation fees. Everything is paid by Lincoln, and that ownership of those registrations or those molecules is done by Lincoln only. The only aspect is distribution. See, going in a certain country and distributing it is a different model. So till now, we were not taking the leverage of going to the distributor and telling him to give this product to this partner or that partner or this partner. That was managed by our distributors who were present in that country. Now we have taken an initiative wherein we are going to the doctors. Whatever we are doing in India, we are doing the same model over there also. Like we are going to the doctors, we are generating the prescriptions, and we are going towards the marketing model of that product to generate more value for the product which was sold before.
Got it. So instead of just having country managers, we'll now have a proper sales team which will be on ground to boost our sales. Understood.
Exactly.
Okay. So moving to the export opportunity that you mentioned for the countries like Canada, and then we have got TGA approval for Australia, and then European Union as well. So what could be the potential of these products in, say, coming 2, 3, 4 years? And also, we will continue to supply the LATAM markets and these regulated markets like Canada, Europe, and Australia from the same plant? And if yes, won't that affect the costing for the LATAM products, so for the LATAM markets?
See, in a broader way, as of now, we have commercialized in Canada. Total, we have around, I think so, 19 odd products which we have developed through our channel partner. So we are, he'll be the, we have developed that product and we are going to export those products to Canada. But as and when the registration comes. So right now, 4 products have been commercialized already. Now, in a sequential manner, the products will come in the, the process. So now answering to your Canadian, Latin market or any other market, once we get an EU approval, it doesn't matter what it is, we have to follow the guideline. So there is the cost factor will incur throughout the company. Whatever you are seeing when we got the EU on the January 20th, from then or before, 8 months before that, whatever was planned, now we have to work in the same way only. We don't have any other criteria. We don't have a second option to go with. So that's the reason that we have to work with that model wherein we are supplying the goods to Canada or whatever we are seeing, whatever margins we are seeing, it is as per the Canadian norms or any of the EU norms only.
Right, sir. No, that is understood and fair point, sir. But what I wanted to understand, suppose we are making a product in our plant for a market like Canada and Europe, and based on the high standards, regulatory standards that they require us to do. While LATAM markets, the unregulated markets, the standards are little lower, and hence there can be some difference in the cost factor. So a product made in a plant which is as per European standards will probably have a higher cost. So selling that product to LATAM markets, will that impact our margins or will that not be affected?
That's what my answer was to you, that since 2020 and before 8 months of 2020, when the QP came in and audited our facility, since then we have been maintaining the standards of EU in our plant itself. So what has happened is that those expenses we have started incurring, and still those expenses are in our profitability which you are looking at.
Okay, understood. So last 3 years includes that costing, and still we haven't been affected on the margin. So you are saying we will be able to maintain it going forward as well?
Once we have been approved by somebody, then we have to follow the status or the documentation as per them only. We are not able to change those documents.
Got it. And so, on your cephalosporin plant, what is the update in terms of commercialization? We are expecting 150 crores over next 2-3 years. So in FY25, what is our expectation from this, and what kind of margins can this business give us? Is it lower or similar or higher compared to what we are doing at the moment?
See, regarding cephalosporin, the plant has already been commercialized. Even the injectable block which we had to put in last, that has also been implemented. We have got the WHO approvals and different country approvals on that site only. And we have even started putting up products into various countries. And now we will see the registrations coming out from that side also. But looking to the margins and the volumes which we are talking about, we are expecting this year at least to touch around 55 to 60 to 65 crores of business from that particular factory, that particular unit. So we are looking at that kind of similar kind of margins are also pretty decent. We can't say they are exponentially well, because we are still new to this and we are getting more and more. So once we are establishing our relationship with those raw materials and the manufacturers of the API, since API plays a major role in this, so we would of course be getting better margins or similar margins to what we are doing in the business as of now.
All right, sir. Understood. I will get back in the queue and for any follow-up, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Rohit Suresh from Samatva Investments. Please go ahead.
Good evening, sir. Thank you for the opportunity. So my first question would be on the exports part. If you could give me the split, which countries are we exporting right now? I would like to see it.
If you say country-wise, I can brief you, but I think so region-wise, if you could even put it up on the email. But mostly, I can say that our biggest business chunk is from the East African region, because we have started from there. So East African region is one of the regions wherein we are doing well. Then comes the West African region, where we have started later, then the Latin, and then Southeast Asia. So this is how we are placed in as of now. Now Canada and other markets are coming into picture also. So those will gain the value within the coming years, and they would be between these list of regions. And if you want an exact number, we can surely email you, or if you can email us, we'll just revert back to you with the country-wise proportion.
Great, so I'll get back. Sir, just on the Africa part, so last 1 year, what my understanding is that there was a lot of currency crisis that's going on in Africa. A lot of companies, pharma companies, have been impacted because of that. Have you also seen a similar impact because of any currency issues?
See, frankly telling you, yes, there are kind of currency issues in the region. But since we are working with partners for a longer period of time, there are cycles already established, and products which we are promoting are also accepted well in the market. So in few countries, the currency issue is probably a bit higher, but wherever we are present, you can get the currency at a bit of a higher rate, but you can get the currency. Right? That's why we were into the B2B model. So the distributor arranges for the payment.
Got it. Understood. So my second question would be, so in the investor presentation, you list various therapeutic classes, the mix. So I just want to understand which segments, which therapies per se are you seeing good growth, or which therapies are you actually focusing more on? And in the next 2-3 years, what's your strategy in terms of, will there be a particular segment where the growth will be much higher? I just want to understand generally which segments per se you're focusing on.
See, frankly telling you, the top 3 segments which as a company we are looking at is derma, cardiac, and diabetic. These are the 3 sectors which we are looking at, and we are starting from promotion to even in the export market and even in the domestic market. We are focusing on this. Also in the domestic market, we are focusing towards more on the ENT segment also, because of the T-Nex brand which we have, and it has been drastically been accepted throughout the country by the ENT, and it is accepted by the people also. So that these are the 4 segments which we are trying to focus for now, and then we'll move with the CNS segment, which we are developing the products, and down the line we will come up with that also.
Got it. So these segments, derma, cardiac, diabetic, how much will it contribute right now?
Right now, in terms of the whole business, if you see whatever we are doing, that contributes to roughly around 100 to 150 crores of the business.
100 to 150.
This is the overall business. That includes the domestic also and the export also.
Got it. Sir, and in the next 3-4 years, would you like to double it? How much do you expect it to grow, these 3 to 4 segments?
We can't, I wouldn't say double it, but at least I would say that yes, we would grow it by at least 50% the amount of this. That's what is the target which we have been taken, and this is a conservative target which I am giving you. But doubling up is a random word to say, but at least 50% in down the line, yes, we will get it and we will achieve that. Because more products are coming out. See, for exports, you need to have licenses in all the countries. So the more the product comes out, the faster the result will come out.
Got it, understood. Sir, in terms of capex, what will be our capex, guidance for the next 2 years maybe, and how much of that will be through debt, internal accruals?
Till now, for the next 2 years, this year we have planned roughly a capex of around 25 to 26 CR, and next year also we will plan around 30 CR, and everything will be done through internal accrual only.
So just one last question. So aspirationally, you spoke about lot of in terms of exports. There's a lot of potential in new markets. There are certain even new areas in the domestic markets you're targeting. So next 3 to 4 years, aspirationally, top line, any number in mind where you would like to be from these current levels right now?
See, till now we are minimum to be on the most safest side and the secure side. If I see, I would assume the company to grow by at least 15 to 18% yearly. We can of course cross the numbers many a times, but at least to have a statement, yes, we will grow by 15 to 18% yearly. So we are looking at roughly around 1,000 crores within the next 3 years, 4 years maximum.
Got it. So just one last. So sequentially, the margins have been a bit on the lower side. So any one-off, any particular reason for a drop in margins?
Margins, what happened? I don't see as a company, in fact, the margins have not been dropped drastically. In fact, if you see, there is a growth in the margin year on year. Even the sales revenue has increased year on year. Sometimes some quarter might have happened wherein there might be issue with a margin by a small percentage or a few, but we have been making sure that we don't lose on the margin, because eventually as a promoter, that's the only thing we have to look for is the margin.
Got it. So annually for FY25 we can, there's no one-off. So on an annualized number we are on track, right? So for FY25, what we did in FY24, we can take those numbers a bit of improvement here and there, right?
Sure.
Okay. Thank you so much, sir, and thank you so much for answering all the questions.
Thank you. Thank you.
Thank you. A request to all the participants, kindly restrict to 2 questions per participant and join the queue again for a follow-up question. Next question is from the line of Himanshu Upadhyay from Bajrog PMS. Please go ahead.
Yeah, hi. Congratulations on good set of numbers. My first question was, what percentage of our portfolio would be in price control?
I need to be honest enough, we would need to give you a list of it, and it won't be a random figure, because there are various products which do come under price control, and there are various products which do come under different segment also. And so for the domestic business, particularly in terms of price control, I can answer you that, but roughly it would be 20% of the products which do come under price control. That's what is the estimated amount, but yes, I can give you product-wise also, but it will be through an email.
Okay. And one thing, this cephalosporin plant, what we have started, how big is the injectables unit and how much is the tablet unit or volume? And
if you look at, in cephalosporin, the basic concept is it's not like regular pharma, the tonnage are bigger, but in injectable we can go up to 26 lakh vials a month. And in the tableting section, depends on the size of the tablet, we can go up to 2 to 3 crore tablets and at least 300,000 dry powder and roughly around 1 crore tablets, 1 crore capsules a month.
And are we focusing on developed market or emerging markets for this product? Because what we understand,
it's just to start up with, we have put it under the umbrella of the existing markets. So at least we generate the documents, we generate the volume, we generate our procurement cycles, we have good relations with the vendors since it's new. So all that is happening, and then yes, we will move forward with the regulated markets also.
Okay. And in terms of new product launches, how many were they done in FY24, and any guidelines for or philosophy what you will be having in FY25, 26? Some thoughts on that?
In domestic, we have launched roughly between 20 to 23 products this year. And in the international market, we always, every month or as and when the country sits for the approval of products, we do keep on getting approvals which are already in the pipeline. So we have submitted the dossiers probably in the year 21-22, they are coming out now. So that process is a recurring process which is going on. And we have 750 products which are still under registration. Probably now it is more if we look at, and for which we have already submitted the registration fees and everything from our established, as of now, income only.
Okay. Okay. Thank you, and I'll join back in the queue for further queries.
Thank you very much. Next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. So for the coming FY25 and FY26, should we look at the company doing around 20% EBITDA margins? Because that was the range that we operated around in quarter 3, quarter 2. So would that be a fair range to assume?
That's what is our target also. And we have been managing the expenses as per the margins what you are expecting also, around somewhere between 20 to 22. Between 20 to 22. That's what we have been expecting. But if sometimes due to some reason, some situations, the APIs wherein the key components are there and that instabilizes, then it will instabilize the whole industry. And during that due course of time, we might see a percentage or two here and there. But it would be an industrial change only, what you would expect.
Okay. Understood. Thank you. That was the question.
Thank you. Next question is from the line of Dishant Jain from Kasar Capital Partners. Please go ahead.
Yeah, am I audible enough, sir?
Yes, you're audible enough.
Yeah, thank you for the opportunity. Sir, a few questions. First one, just wanted to confirm that you said that you want to achieve 1,000 crore revenue next 3 years, if I'm not wrong.
Yes.
Okay, that's the first one. And then one second question is on the balance sheet item. So, like from the past few years, the loans to others, basically unsecured loans have been increasing. Like on the FY24, it has been around 104 crore. So, can you please help us understand like to whom we are giving these loans and what's the purpose?
While it's a process now, gradually when we have been investing and we have avenues to invest, then we have been taking calls on investing into, like when we had to invest into cephalosporin unit, we had to invest it gradually, and we couldn't even disclose the amount until and unless the investment until and unless the whole deal has been given. So we are looking at an opportunity this year also wherein we have been want to utilize our own capex and come up with a growth plan which will be catered down the line for another 3 years because CIFA has already been up and running now. So that's something next which we have taken, and yes, there have been loan and advances which are given against that also, and sometimes we do give vendors a support also wherein we help them and they give us a better price in terms of costing, in terms of narrow margin products. So we do that, and those products are such wherein the value of the product would be bigger, but still the margins would be lesser. So we try and focus more towards that.
Okay. Sir, I got your point on the vendor support. Can you please repeat again on the first part, which you have highlighted for the growth, like you said in cephalosporin plant, you have invested. So
we have already started looking for another next leap, what we want to take, like cephalosporin. So we have already identified and we have started the process wherein funds have been given to the person as a first initiative. We haven't gone through the whole process. So it is just a initiation which we have done. And once everything is being, due diligences and everything has been cleared, then yes, we will come back and we will announce it publicly that what we have been done in that.
So basically, those loans will be converted into our capex, right? When the opportunity materializes.
Yes, we are. Otherwise, we won't. We want to grow the company, and that's why we are even declaring it. We are doing this kind of loans and advances have been given, and those are given for the betterment of the company only. And that's what is our goal. Because today, common goal of Lincoln is Now we are present into 60 countries. If I just speak on that 60 countries, today I have 17, 18 lines which I am working on. If I increase these lines to 25, I can easily cross to 1200 to 1300 CR easily. I don't need to do any other thing. So I am now trying to establish more lines. So the same countries are there, same medical representatives are there, my fixed cost will dilute, and I'll have more products to give it to various markets.
Okay. Thanks for the explanation, sir. And my last question would be on the gross margin. So if you see sequentially or the Y-on-Y basis, the gross margin has been dropped by around 6 to 8%. Is there any specific reason, sir?
Gross margin, if you see year-on-year you're talking about, or quarter-on-quarter you're talking about?
So both. So from quarter-on-quarter as well and Y-on-Y as well.
See, the quarter-on-quarter, if you see, there is a growth. Last year, quarter ended, margins, if you see, it has been, the last quarter was 14.80, wherein this quarter it is 12.9, which is, I think so, 2% less if you see quarter-on-quarter. But if you see year, throughout the year, it's hardly 0.27. So it is not, yes, on your question, you are right that it is there, but it is not a significant amount which has been there. It is just 0.27. If you see year-on-years of the year before, then you can compare and see we have started performing better in the fourth quarter compared to the last fourth quarter. So that is what we have started doing and analyzing ourselves as a company, that where we were wrong and how we can improve. So that you can see on the record also, since you have seen you can put in quarter of 21, 22 also, and you will see the difference in 23-24 and 23-24 also.
No, so let me specific. So in last quarter of Q4 of FY23, you have reported 57% of gross margin, and this quarter of Q4 FY24, you have reported 48.3% kind of gross margin.
What you can send us the report. I'll surely go through it, and we will give you an answerable reply. But what we have seen as of now, what we have, if you see as a EBT or even any other, if you see EBITDA margin, last quarter compared to last year is better, in fact. But if you see on quarter, we have been growing only. Even the last year also, like 22, 23 is there, put 21, 22, you will see that it wasn't this good. What you are looking at now. I can send it to you. You can just email us and we'll surely resolve your query.
Sure, sir. I will take this question offline. Thank you for answering all the questions. We wish you all the best. Thank you.
Thank you.
Thank you. Next question is from the line of Dasarda from Viruddhi Advisory. Please go ahead.
Hi, sir. Am I audible, sir?
Yeah, you're audible. Distant.
Yes. Thanks for the opportunity. So I have a few questions. One is on the cephalosporin plant. At 100% capacity, what is the rough revenue we can generate, sir?
See, looking to the 100% capacity, we can generate, if it works out, we can generate up to 220 to 230 CR. But then again, it depends, since cephalosporin is a product which is highly valuable. So it, of course, depends on the product itself, that which products are we targeting, or even some products are there in the new cephalosporin range. If you see that in India also, people are getting resistance to antibiotics. Basically, cephalosporin is antibiotics. So people are getting more and more resistance to antibiotics. Now, if you see the new antibiotics, the prices are so high that, the industry itself, you see that this is a good opportunity and we can easily go to 200 to 220 by running it the whole time. And we have also planned for the second line also, in case if we need to put up, we can do that. We have available space for the injectables in that also.
So right now, what about 55 to 60 crores which you have guided from this plant, mainly caters to export market or the domestic market? Because from our understanding, domestic market in cephalosporins has been very competitive. So is it for the domestic or for exports?
See, this plant, earlier we were manufacturing the product at a different, somewhere in the northern part of India. And we were procuring it from the different vendors. Now we are manufacturing it at our own site for the domestic market. So first, that is an advantage for us. Second is, yes, export markets, there is a lot of opportunity for this, and the products are minimal compared to the existing basket what we have. So the beauty about this business is we have to work on only 15 to 20 products. So if we work on these 15 to 20 products, then the market itself is there and we can promote the product through our own team in the domestic market as well as the export market, and we can generate the revenues from there only.
Got it. And in domestic market, what are our top 3 states in terms of revenue contribution, sir?
I can just...
At least top 2?
Yeah, I'll just give you. One would be UP and other is Assam.
Other is Assam. Okay.
Yeah, and the third one, if you want to know, is Orissa.
Okay. And do we have any plans for US FDA application in future, sir, in near future?
See, frankly telling you, this is the loans and advances and all that plans which you are seeing is moving towards that line only. So once we get something on it, then we can, yes, we would like to go for US FDA. I won't say US FDA, but I would say yes to many other countries who are as good as US FDA, which we can go in and have the better margin.
So my last question is on the cyclicality of the business. The other participant is asking about Q4. But if we look at the history of the company for the last 5-6 years, there is a little cyclicality which we can see. Quarter 4 being, weakest being in terms of top line and margins. Of course, there has been improvement on year. Every year there has been improvement when you look at the same quarter last year. But is there any specific reason for this seasonality where the fourth quarter is being the weakest in terms of market?
Actually, your analysis is right. There is seasonality in this part of the, particularly this region. Also, sometimes what happens is, since the March ending is a year ending over here in India also, many people wouldn't have to carry the stock also. So they are kind of a bit into a dilemma that, whether we should keep the inventory or not and all that. So that's the reason that you see that, the fourth quarter is always down, but we have improved it since I think so since last 2-3 years, we have made sure that, we perform better, and we have analyzed that since, I think so last 3 years, we have got that pulse in the market that, this is what is something wrong which is happening to us on the fourth quarter. So we have tried to make sure that, we give the positive result and grow the company towards that standard only.
Got it. It is more to do with the inventory management rather than shipments to some other countries and all that. So it is just because of the financial year end, which maybe in the domestic market, in the inventory management is little on the lower side.
Yes. That's the only thing. Otherwise, export business keeps on going the same way. In fact, it is sometimes it performs better also because in year end, we are also in a situation wherein we also want to dispatch more products to attain our business volume. So we all are aggressive in the last quarter.
Got it, sir. Thanks a lot for answering all the questions, sir. All the best for your future.
Thank you.
Thank you very much. A request to all the participants, kindly restrict to 2 questions per participant. Next question is from the line of Harshad Bhagwan from VI Solidic Investments. Please go ahead.
Hello, sir.
Hi, how are you?
Am I audible?
Yeah, you are audible.
Yes. My question was answered before. My question was regarding the cyclicality of the nature only during the March quarter. But I just wanted to ask that is it regarding the inventory only, or like are we facing challenges to the African markets or any other markets during the March quarter?
In fact, what happens is in any other market except India, the financial year closes in December. So what happens is by March, they are desperate of the inventory because they try to minimize their inventory in November because December is their year end. And in India, March is the year end, so they do this in India. So there is nothing to do with any of the export markets or any other. It's just an inventory balancing which happens.
Okay. Thanks for answering my questions, and all the best for your future.
Thank you.
Thank you very much. Next question is from the line of Ashwin Reddy from Samatva Investments Limited. Please go ahead.
Yeah, hi, good evening. Can you hear me?
Good evening. Yeah, I can hear you.
Yeah, great. So firstly, sir, I just wanted to get some more clarity on the domestic market because the market appears to be fairly competitive, and when you say that you want to focus on cardiac and diabetic, along with derma, so what are the opportunities that you're seeing, and what is your advantage? Where do you think you'll be able to take market share / build a business in the domestic market?
Firstly, we were in the domestic market, particularly these 3 segments have been increasing in terms of medication in the industry as a whole also, as the lifestyle of people has changed. So now since the need and the demand of the products itself has increased the market share, first thing. Second thing is we were mostly placed in the tier 3 before. Now we are targeting towards tier 2 and few of the tier 1. So gradually we are picking up that market in the domestic market for now. So this is where we see the growth coming from in the future. And with exports, as I told you that we have already submitted the documents to many countries and many of the registrations have come out. And it's a process wherein it's going to keep on coming out. So, and it's a process that we are going to keep on submitting also because every time, like we go to a GP or a specialized doctor for cardiac or diabetic, there are new and new drugs which are coming out, and the doctor would like to prescribe those drugs to the patient, as it is safer and better for the patient also. So that's what is the whole thing about, and that's what we want to cater and cover to.
But okay, got it. But so then, in terms of domestic MR, so then the growth will come from increasing your MR, increasing your coverage. Is that how we should understand in the domestic market?
Individual.
Because right now we say that I believe you have close to 600 MRs, right? So how should we think about the MR growth in the domestic market in the next 3-4 years? And out of the 1,000 crores, which is your aspiration target, how much would the domestic numbers be?
See, what we are looking at is roughly in the domestic market, we are looking at an annual increase of roughly 15 to 18%, as I told you overall. And regarding MR-wise, we will open up more and more space, and also as the tiers also we open, from the second to the first one, we will be placing more MRs in the same region also, if required and needed. So you can think that down the line, we will have somewhere between 750, 800 MRs within 2 years.
Okay, got it, understood. And second question is on the loans front, which was asked before, and you did clarify that it is because of the plans that we have. But 2 points here, sir. One is we don't see this practice in other companies. So it looks a little different / strange to outsiders. So obviously the questions arise on why this route, because if you're not seeing it with other companies and if they're able to manage in a different manner, why should we go through this route is one thing. Second, in general, again, this is just a feedback from us, which is in general, loans to promoters is usually seen poorly by the market participants in terms of corporate governance.
Is breaking a bit, I think so. The phone is a bit closer. So if you can just, we couldn't understand it as it was a bit louder at our end. If you can
got it.
The last question.
I'll just repeat it. Yeah, sure. I'll just repeat it. So my question is regarding the loans to the promoter loans and the loans to the other parties. So 2 points here. One is we don't see other companies doing the same practice. So they've been able to manage it in a different manner. So is there a possibility to change and cater to and go back to the industry practices if there is any for this, number one? Point number 2 is, in general, loans to promoters is not seen very positively in terms of corporate governance practice by the market participants. So if there is a way to change it and if there is a way to remove this kind of arrangement, it will be much appreciated. So that's one feedback which I wanted to give you.
Sure, we will take up this as advice from you, and we'll make sure that if any kind of changes can be amended and lesser things can be done, then we will do that. It's just about disclosing it, since we are otherwise, we would disclose the names also of who we have been.
Right now, I think it's also like regulatory requirement on as well, right? Also, if you see the cash flow statement as well. So there's like loan going out, coming back in, all that is there, which is fine. But I'm just saying it is not looking very positively. So that's just because we speak to people in the market and all, and we understand how we can think about it. It's just the feedback which I wanted to give you. That's all.
Sure. We'll keep into mind, and we'll talk to our CFO is also with us. So we will take into consideration your point also, and make sure that in future we will get you more transparent details.
Great. Thank you so much. I appreciate that.
Thank you very much. Next question is from the line of Mitesh Mehta, individual investor. Please go ahead.
Good evening.
Good evening. How are you?
I am fine. Am I audible?
You are a bit loud. If you can just control that, that's okay otherwise.
Just a minute. Yeah, my question is regarding margins on QOQ basis. Like there was a question from someone wherein management replied that margin is growing on QOQ basis. But as per the results, margin is like for March 24 quarter, it is 13% operating, while March 23 it was 15%, and March 22 it was 17%. So it looks like same way the material cost in March 23 it was 43% of sales, and March 24 it is 52% of sales. So if you can elaborate on same.
See, the question you are asking is, I even couldn't understand, especially if it's regarding the bifurcation between the raw material or the material consumption. Then
right.
If you can email us and elaborate it better, then I would be able to get the perfect detail and then get back to you, because rough marginal product to product, there are variations in the material input. So sometimes material input is higher also, and material input is lower also. So it's vice versa. But looking to your, if you have anything related to the material consumption, you can please email us. And
I'm looking at final operating margins also, and it has been reducing on QOQ basis, YOY basis. Like last March, it was 15% operating margin. Just the final margin looks a bit higher because of this other income. Yeah.
Sir, if you see without other income also, if you see the EBITDA margin, definitely for the quarter 4, there is a reduction of small by 2%. But if you see for the 12 months, current year it is 17.21, whereas the last year it is 17.48. So there is hardly a reduction of 0.27.
Okay.
It does not amount to a big amount.
Yeah, but as per my information or the general market, raw materials, especially API prices, have been going down, especially compared to last March. So is it a structural, anything structural, or it is just a cyclical kind of thing due to new plant addition?
Positive note that being an investor in our company, if we can achieve and produce sales of 580 crores with a lesser amount of raw material, a lesser amount of value of raw material, we have marketed our product to so many people that because we are talking about number of tablets and number of injectable or number of dosage forms wherever we are. So looking to that, if you see, then we have produced more. If you are considering raw material prices going down towards my sales or my margin, if the raw material prices have gone down
as a material,
then it is only 510 last year. If the raw material price was high, if this year raw material prices are low, still my sale is 580, which I have increased by 13.76%. If the raw material has gone down and my sales has increased by 13.76%, then I should have, that's the reason probably you could see a better output in the company also, in terms of profit.
Okay. And my second question is regarding debtor days. Is the company working on anything on reducing the debtor days? Because since last 3 years, it has been gradually moving up, not to much extent, but gradually moving up.
No. We will, the debtors who we are as of now, debtor days have gone gradually. We are talking about is hardly from 89 to 101. Sometimes what happens is, if it is March, last quarter, and you see some kind of plus and minuses, but it is not that the days have increased drastically, and we keep an eye on it, and there is a governance wherein we make sure that the payment flow coming in also has to be maintained, and paying to the vendors also has to be maintained. So both ways we keep our balance on it.
Okay. That's it from my side. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, we will take that as the last question. I will now hand the conference over to Mr. Munjal Patel for closing comments.
Firstly, thanks a lot to everyone for joining and being a part of our company. Speaking to you all, it gives us an positive note that except us, also many other people are looking in the company and giving us input. Few of the inputs are really appreciated, and few of the questions which we have explained, I hope the investors could understand. And also, whenever needed, you can email us. We'll reply you also. If by any chance, if you are in town and if you want to visit and have a factory visit also, we'll be most happy to take you around. And we wish that we keep on performing this way, and everyone be happy with our growth story. Thank you. Thanks.
Thank you very much. On behalf of Lincoln Pharmaceuticals Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.